Welcome back, investors, to Ticker Time News. I'm Adam, and concerns that cracks may be forming in the foundation of the housing market were tuned up a notch after KB Homes, ticker symbol KBH, surprisingly missed Q1 EPS and revenue estimates on flat year-over-year deliveries of only 2,868 units. The homebuilder's disappointing report comes on the heels of a soft February new home sales report that came in at a seasonally adjusted annual rate of 772,000 units, a 2% decline month over month, badly missing estimates of 820,000 homes. And a report just released today showing pending home sales fell 4.1% in February after falling 5.8% in January. Now, don't miss out on gains yourself. Beat this crazy market with us by clicking the first link in the description. Now, with the average interest rate on a 30-year fixed-rate mortgage has climbed to around 4.5% compared to just 2.9% last fall. These three developments provide some evidence that the housing market is starting to cool off. A 1.6% jump in mortgage rates may seem trivial, but that increase makes a significant difference in terms of affordability. And affordability is the key to the housing market right now. People are being priced out of the market as we speak, especially for first-time homebuyers. To give you an example, a $500,000 home with a 20% down payment and a 2.9% rate, which was last fall's rate, would equate to a principal and interest of around $1,664 a month. Now, at 4.5%, the rate today, that amount jumps by about $363 to $2,027 a month. And that difference can mean affording to buy a home or being forced into renting a house. Now, compounding the issue is that inflation is outpacing wage growth, leading the University of Michigan Consumer Sentiment Index for March to come in at 59.4, which is the weakest reading since October of 2012. Now, the key takeaway from this report is that rising inflation is eating away at consumer sentiment, as consumers recognize that their standard of living has been reduced because their income is not keeping up with inflation. It was also indicated in this report that 32% of consumers expect their overall financial position to worsen in the year ahead, which is the highest level since the survey started in the mid-1940s. That's not looking good, America. And against that backdrop, it's not hard to imagine a healthy pullback in the housing market, especially as rates continue to rise. But for KB Homes, though, rising interest rates are not the main problem. Instead, supply chain challenges are worsening, making it difficult to even complete home construction. During the last 6 weeks of the quarter, the company lost about 2 weeks in its construction cycle. Now, there are a few specific issues that KB Homes is dealing with. First, there is a shortage of appliances, your washing machines, dishwashers, ovens, etc., as manufacturers haven't increased production to meet demand. KB Homes managed to mitigate the impact by buying appliances directly from retailers, but that approach comes with a higher cost. Next, a limited supply of flexible ductwork hampered KB Homes' ability to complete HVAC work, creating a delay in finishing other parts of the home. Then you have windows, cabinets, and garage doors all backlogged with their own supply chain problems. Although KB Homes is now working with new manufacturers to try to help fill this backlog. Now, despite these intensifying headwinds, KB Homes still reaffirmed its fiscal year 22 housing revenue guidance of $7.2 to $7.6 billion. In fact, CEO Jeff Mezger said that KB Homes has sold almost all the homes needed to achieve the midpoint of that guidance. During the earnings call, Mezger maintained a bullish tone on the housing market, citing favorable demographics as more millennials become first-time homebuyers and a limited housing supply situation. Relatedly, KB Homes boosted its fiscal year 22 average selling price forecast to nearly $500,000 from $480,000 as it looks to capitalize on the imbalanced market. Now, I know that's good for KB Homes, but it's definitely not good for the first-time homebuyer that Mesger mentioned, and it's something that I just can't reconcile with. First-time homebuyers are being priced out of the market by every interest rate point increase. Now, the main takeaway is that there are several crosswinds at play in the housing market, and my concern is that the negative ones, rising interest rates, inflation, supply chain issues, falling consumer sentiment, people being priced out of the market, are beginning to overtake the bullish trends that have underpinned this red hot market. So, what do you think about KB Homes or even the housing market in general? Let me know in the comments below, as your comments make these videos so much better. Smash that like button, share this video, and beat the market with us by clicking the first link in the description. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.